Hola mi gente, this is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, we are going to go over how to trade options on Thinkorswim. So without further ado, let's get into it. Let's do it. All right, so you're ready to buy and sell options, but you don't know how to do it. At least you don't know how to do it on Thinkorswim. Well, no worries. We are going to show you on today's video. On today's video, I'm going to show you how to buy and sell call options. I'm going to show you how to buy and sell put options, and I'm also going to show you how to do verticals. We'll talk about call credit spreads, we'll talk about call debit spreads, and we'll also do put spreads as well. Those are the main things that most options traders use. If you know how to do all three of those, then you know how to do any or all of the options trading strategies out there, because basically it's just a slight variation of those three main principles. But step number one, how to look at options. In Thinkorswim, when you have your charts up and you're looking at the stock, for today's video, we're going to look at Intel, ticker symbol INTC, as you can see up here in the left side of the screen. We're looking at the charts, but what we want to be looking at is the options chain, because that's what we're going to use to open up orders. So if we hit trade and we have all products available, here's our options chain. This is where the money making happens. So real quick, a quick explanation of what's on the screen right now. When you look at the options chain, you have the expiration dates. Any expiration date that's in yellow, that is a weekly option. Any expiration date that's in gray, that's a monthly option. All stocks that have options will have monthlies, but not all of them will have weeklies. It's more of your popular stocks that have weeklies. Next to the expiration date is the days until last trading day. That's essentially how many days until that expiration date. And all the way over to the right is your implied volatility. When you scroll down to the left and you hit today's options stats, you will see what's going on for this stock today in the options market. You can see that Intel had a call volume of 197,000 options, a put volume of 125,000 options, and a total of 322,000 contracts. There's other information as well, including your 52-week implied volatility high, your implied volatility low, your HV high, your HV low, your implied volatility right now, and VWAP. Now that we're looking at the options chain, we need to move on to the next step. We need to select an expiration date to start. To be simple, we're just going to take the monthly of February 18th, 2022. So we click on that to expand it. Now, the amount of strikes that show up on your screen, well, that depends on what you have selected up here at top. As you can see, we have 10 strikes shown, but we can see all of the strikes if we choose. I'm going to keep it at 10 to keep it simple. Now, your layout, the information that is shown automatically shows the last X, the net change, and you're going to have call options on the left and put options on the right. You can modify this by clicking this and clicking a preset, or you can customize it. For instance, if we like looking at the last X and the net change, but we also want to see delta, well, we can just click on delta, add item, and hit OK. Now we have delta shown here. What we also probably want to see is volume and open interest. So we can either just click on volume open interest, or we can add that to our customizable preset. You don't want to have too many things displayed here, but me personally, I'm really interested in volume, open interest, and delta. Delta is extremely important, so make sure you have that displayed. And the last X is good to have, but you can just use the bid and the ask. If there's very low volume, it's good to see the last X. So what I'm going to do here is I'm just going to customize this. I'm going to add delta because that is extremely important. And I will add the last X as well. And then I will hit OK. So now we basically have all of the information that I like to see personally. So next up, we need to decide, well, what are we doing? Well, the premise of this video is not to decide what trades to execute. It's more of how you execute them. So let's just say we're bullish on Intel and we're going to buy a short-term out-of-the-money call option because earnings are coming up and we could see a pop in the stock. So if the stock right now is trading at $52, There are a couple options that are out of the money. Everything that is shown in purple is in the money. Everything that is shown in black and white is out of the money. And you can see how this changes from calls to puts, because puts, a strike price that is higher than the current strike price, is in the money, and calls, a strike price that is lower than the current price, is in the money. And that's why they're inverse for the two columns. But let's say it's $52 right now. We think it could hit $55. Well, to open up an option for it, you just right click on it. You're going to hit buy and you're going to hit single. And then your order entry is going to show up down below. Now there's some information to look at here. What the bid and the ask was and what the last was. This is important because what's going to show up is the last X most of the time. But we can probably get closer to the bid and save ourselves some money. So having this information right above will help us determine or try to get in at the best price possible. So we can drop this down to $126, which is a penny above the bid. Maybe it gets filled, maybe it doesn't. Other information that you need to know here is your quantity, how many contracts you want to buy. Now you got to keep in mind when you're buying options, the premium is times 100 to get the actual cost. So if it's $1.26, you're going to pay $126 for one contract. If you add more, you're going to pay 126 times 5, whatever that is. And you can see there's other information here as well. Your symbol, that's the stock, that's the ticker, INTC. All of this is going to be preset when you click on the right one and hit buy and single. Your type is going to be a call. Here's your price, your limit. You are only doing this trade for the day, but if you want to keep your order open until you cancel it, meaning that this order will remain open tomorrow, the day after that, and days after that, you hit good to cancel. After you have all of that set, you're going to hit confirm and send, and this is where you're going to see the total amount that it costs to you. So we're buying 5 call options for Intel for a strike price of $55. It's $126 per. We're looking at $630 plus $3.25 in commissions, because it's 65 cents a contract, and then you have another 5-cent fee. This is your options regulatory fee. When you're done and you agree with all this information, you hit send, and then you wait for your order to be filled. I'm not going to actually hit send because the market is closed, and I actually don't want to buy 5 of these contracts. Now, when you have a position open, it will show up on your monitor tab, and you can close out of your position there, or if you have a position, you can you can do it from the options chain as well. As you can see, I have a position already open for January 20, 2023 at the $40 strike. They're currently trading at around $1,400 per. If I wanted to close my position, I could right click, I could hit create closing order, and I could sell 3 of those options that I currently have open right now. When you click on it, your order entry is going to show up. This is where you're going to probably increase your price because right now you're at the bid and you want to be closer to the ask. You want to sell these for as high as you can. The process is the same. Another thing you can do is instead of selling contracts, you can roll them. It's the same process. If you right click, you're going to hit create rolling order instead of create closing order. And what that's going to do, if you click it, you're going to see what it's going to do. It's going to sell 3 options for January 20, 2023, and the preset is to roll them to the next available expiration date, which is the next leap, which is January 2024 at the same strike. So you're selling and buying, but you can modify the dates, you can modify the strikes, and an important thing to know here is when this says debit, that means you have to pay. If it was to say credit, that means it's money that's going to be awarded to your account immediately. That's how you roll options. What I showed you earlier is how you sell them. Now let's take a step back. We covered the call side of things. Now let's cover the put side of things. The process is the same, but instead you're dealing with options that are on this side of the screen. So let's say earnings are coming up and we think the stock is going to drop. Let's say that stock is going to drop below $50. So what we do is we right click on that and we're going to hit buy and single. Important thing to know here is you got to make sure this says put, because there have been times where I've done this and it said call. So you got to make sure that you're buying a put instead of a call option. Otherwise, the process is the same. Make sure you have the right price, hit confirm and send. You will get another screen to come up to showing you the total dollar amount, and then you hit send as well. Next up, let's talk about selling options. You can sell options that you do not have. These are called writing options. So let's say we like, so the first strategy that I'm going to cover is cash secured puts. Let's say that we like Intel, but we don't like it at the current price. I want to buy 100 shares of Intel, but I don't want to buy it at $52 a share. My ideal price for Intel is $45 a share. That's where I've done my analysis. That is where I think Intel's at fair value. So let's just assume I'm okay buying 100 shares at $45 and I have the cash to do it. It's a cash secured put. Well, what do? Instead of buying a put option, you're selling a put option. So you right click on the strike, you sell a single, and you sell it for whatever price you want. In this case, I'm going to get $60 up front. If Intel is below $45 on the 18th of February, then I am obligated to buy 100 shares. This is a cash secured put. I'm not going to go into extreme detail, but that's the premise of that options trading strategy. Another options trading strategy is, let's say I already have 100 shares of Intel. And I think Intel at $60 is overvalued, and I'm okay selling my stock at $60. But I want to hold on to it until that happens. Well, I can sell covered calls. So instead of buying a call option, I can sell it. Let's say I'm going to sell it for the $60 strike. So you right click, you hit sell, and you hit single. Make sure that this says call. We're at the $60 strike, and I would get paid $36 to sell that call option. If Intel is below $60 on the 18th of February, then nothing happens. I just keep that $36. If it's above it, then I have to sell my 100 shares of Intel for $60 a share. Doesn't matter what the stock price is. It could be 100. I have to sell it at $60 because I wrote or I sold this call option saying that I would do that. That's called selling a covered call. I'm not going to go into more detail, but that's the premise, that's the basics of selling covered calls. Now, if we take a look at this options chain, and you can see what I actually have going on here, is I own 3 leaps at $40 strike price for January 2023. The delta is 0.79, 0.8. I own 3 of those, and I have been selling calls that are out of the money. And if I expand this to all, I sold a call at $59 for February 4th and $59 for January 28th of 2022. I essentially collected the premium by selling those calls, and because I have a long-term call option that is in the money, what I am doing is I'm selling a poor man's covered call. What I would have to do is if Intel is above $59, I would have to sell these leaps to close my position on these or to cover them. This is a little bit more advanced than selling just covered calls, but essentially instead of owning 100 shares of the stock, I own a leap option that is in the money, has a decent delta, and it's going to rise in value as the share price goes up and up. And if my calls that I sold end up in the money and I have to cover, well, I have this position to do so. I still make money. My gains are not as high as they could have been, but this is a good strategy to collect premium if you don't have enough money to buy 100 shares of something. But it's important to buy a call option that works for the strategy, and that's where delta comes in. All right, the last thing that I'm going to talk about, and we're going to make this quick, is how to do verticals. I'm going to show you one example, and that is probably the most common one, and that's a call debit spread. Now, let's say I'm bullish on Intel, and I think it can get to $60 a share, but that's the high end of what I think it can get to. I don't think it can get to above $60 a share by February 18th. A strategy that I can use is I can sell a call debit spread to lower my entry costs. So if the stock right now is at $52 and I think it can get to $60, I can sell a call debit spread, and I'll show you the risk profile on this trade. Essentially, it lowers your entry cost, but it caps your maximum gains. To enter into a call debit spread, you're going to hit buy, and instead of hitting single, you're going to hit vertical. And now you're going to see your order down below. The first strike is $52.50. That's the one I clicked on. The next strike is going to be that $60 one. That's the max that I think Intel can get to. Now you see my debit is $1.87. If I was just to buy the $52.50 strike, I would have had to pay around $226 instead. So it lowered my entry costs. You can change how much you're willing to pay, but essentially a call debit spread is going to lower your entry costs but cap your maximum gains. Now let's take a step back. If you don't really know what you're doing, but you want to kind of analyze the risk profile just to double check that everything makes sense. So let's do that for that trade. Instead of hitting buy, you can hit analyze. You can hit an analyze buy trade or sell trade. You can hit vertical, and let's enter that in as well. So it's going to show you your positions. I'm going to exit out of the positions that I own, and I only want to see that vertical that we're going to analyze. What we're going to do is we're going to buy the $52.50 strike, and we're going to sell the $60 strike. When you enter that vertical option, it's going to automatically say buy one and sell the other. This one is your hedge, and that's how you lower your entry costs. And now what you're looking at is your risk profile. The values down below are the stock price. The values on the left are your gains in dollar amount. 0, this red bar, is your break even. So our break even occurs if Intel is at $54.36 at the expiration date. Our max loss occurs, and as you can see, it's a horizontal line here, meaning we don't drop our max loss anymore, is the amount of money we're putting in at $187. That occurs if Intel is below $52.42. Now, because this is a call debit spread, there is going to be a max gain, and as you can see, our gain gets capped here at $60. The gain would be $563 off of a $187 position. The gain is basically the difference between those two call options. So 60 minus 52.5, so $750 minus what you put into it. And that's how come we come up with $563 as our max gain if Intel is above $60. Now you can do this risk profile for any options trade. If you want to do an iron corridor, you don't really know what your risk profile is, you can analyze the trade. If you want to do a call credit spread, a put debit spread, or a put credit spread, you can do that as well. This is more complicated. It probably needs more information. I might make another video just talking about this strategy, but essentially that wraps it up for trading options on Thinkorswim. If you have any questions, you can comment down below, and you can also use the education tab on Thinkorswim, and you can go to the Think manual to learn more about what Thinkorswim has to offer. Now, there is a ton of information regarding options, so if you have a particular question and you want to ask it, feel free to do so down below in the comment section. You can also join our Patreon. It will give you access to a private Discord server where I definitely will be there communicating with the other investors in the chat room. It's $5 a month. A link to the Patreon is provided down below. But outside of that, I thank you so much for your time. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button to help with the YouTube algorithm. Otherwise, I'll catch you all on the next video. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!